Hi everyone, welcome to Crowd Forecast News, episode number 180 for April 30th, 2018. Today we will be discussing the 240th weekly report. So if you haven't had a chance to take a look at that yet, you should be seeing it on your screen while I'm talking now. You can also go to TimingResearch.com to download the full PDF there. My name is David Kosmeter. I'm the creator of TimingResearch.com, and I have Dean Jenkins back to moderate today. So I'm going to go ahead and turn it over to him.
All right. Hey, thanks, David, for pulling this show together and for inviting me back to moderate. I always enjoy this forum, and I look forward to hearing what the panelists have to say in response to these questions. And so with that, let's go ahead and introduce our panel. What we'll do is have each person just take a minute or two and introduce themselves. And it looks like we got somebody new, a first-time person, Jane. So
yes.
Good to have you here. Yeah,
thank you, Dean.
I look forward to meeting you and to hearing what you have to say.
Yes, well, thank you.
So we'll have you go ahead and lead off, just like a 1 or 2 minute introduction about, your service, what, your approach to trading.
Sure, definitely. Well, basically, I came to day trading after my first daughter was born back in 2014, but I started my day trading journey in February of 2015. And prior to that, I had been a long-term value investor, but I was looking to get out of my job so that I could be home and present for my daughter. And subsequently, I've had a second daughter and gone on further to write a book. I share everything through my blog and my YouTube channel and Twitter and Instagram and LinkedIn, basically to try to help people along in their journey as well, because I remember what it was like to start out in the day trading world and have an ocean of information. And so I've tried to help shortcut for people and really try to create a encouraging community of followers and also people like Anka, where we're going to be working together doing the Modern Trader Summit this summer in Orlando to really help people succeed in the day trading world.
Awesome. Well, I love it, and I love the name of your website, CJ and Trade.
Yes, nice and easy, just like CJ and Run, but trading.
Right. That's right. That's awesome. Well, again, good to meet you. Thanks for being here. I look forward to your comments.
Thank you.
And you mentioned Anka. Anka is here as well. We've been on a few times together. So good to be back here, Anka. And if you would take a moment or two to introduce yourself.
Hi, Dean. Hi, everybody. First of all, thank you, David, for putting together such a great show again today and a great lineup. It's great to be amongst we're literally friends now. We can't say that we're colleagues anymore because we've known ourselves for some time. So my name is Anka Metcalf. I'm the CEO and founder of TradeOutLoud.com, which is a trading education firm that specializes in educating individuals how to day trade and swing trade the equities and the futures market, with emphasis on day trading futures and swing trading stocks. I've been doing this, like I said, for about 15 years and more than 15 years. And prior to becoming a professional trader, I come from investment banking background where I spent more than 10 years. I'm also the designer of institutional proprietary trading system, which is based on price support resistance, specific trigger times, specific price zones, chart synchronicity, and a strict set of trading rules that literally keep me safe, and not only me, but my traders safe. If you should have any questions, you can follow us on Twitter, on Facebook, or on YouTube, or our handle is easy to remember. It is Trade Out Loud. And like Jane mentioned, we're working on an event, and we're really happy to see all of you guys. If you can join us in Orlando on June 23rd. It is going to be a great event, and it's going to be a great line, but more about that. And Jane is going to fill us in on more updates on that event and more details.
Okay, awesome. And again, thanks, and it's good to be here with you again. Like I said, friends now, right?
Right, Dean.
All right. Speaking of another friend, Jim, this is our second or third time on a panel together.
I think at least that, yeah.
Yeah. So if you,
well, I'll throw my intro in here. I'm Jim Kenney, and I do provide the content to the optionprofessor.com DVDs. And basically, it's an education firm on the option area, looking for strategies for income and cash flow, looking for strategies to speculate limited risk, and also looking for strategies to hedge or protect a position. And so there's lots to learn in the option area. And I put these things together a number of years ago, and I think they've been very helpful for people.
Outstanding. All right. And it is good to have the option professor here. Who knows? We might need your expertise as we get into the market here. All right.
I hope so.
Yeah. No, good to be with you here again, Jim.
Thanks.
And I am Dean Jenkins, founder of FollowMeTrades.com. I have been trading about 25, 30 years now. But I started off as a fundamental trader, went to business school and got all excited about analyzing earnings statements and companies and all that stuff, and was incredibly frustrated by it. Had some, some success, some not success, but ultimately about 7 years ago started the journey to becoming a technical trader, and this is way more fun, way more profitable. So I'm definitely a technical trader, and I run a stock and options advisory service. I publish the picks that I'm taking in my own account with my own money. Have a live trading room in the mornings where we analyze the overall market, look for trades, and I offer some training and mentoring services. And again, thanks, David, for having us all here and pulling it together. And I enjoy this. So let's jump right into the questions, and we'll start off with number one. And the first question is, do you think the S&P 500 from Monday's open till Friday's close will be up or down, and what's your confidence on that? Now, don't jump ahead and tell us why, because we're just going to get it on the table here and see where we stand in terms of a consensus or some disagreement. So the first question, again, just up or down, Monday open to Friday close, S&P 500, and your confidence. And then we'll go back around again, and you'll have a chance to share charts or give some kind of analysis as to why you think it's going to do that. And we'll just keep the same order. So let's see Jane analyze the market.
Yeah, for sure. Well, here we go. Let me see if I can go ahead and get my screen sharing going really quickly, and I will show you my thoughts. Okay, so can you guys see that?
Yes.
Up here? Okay, so basically this is a daily chart. I'll back it out to the weekly chart. But to me, I think that we are really bouncing down off of this trend line here. Let me remove this. And this one too. So this lower one right here, if I pull it out, that's going to be the more recent one that we've had since we've had this pullback in January. And this is the longer term on the weekly chart that we've really bounced off of. And to me, it really looks like we're going to be pulling back and oscillating between these two trend lines. Oops. Cancel, delete. There we go. So it looks to me like we're going to come back down here before we head back up and retest it. This is I've got the 9 EMA and 20 SMA here. So it looks like once it breaks down, I think it's going to continue on down. This is the 200-day moving average. So I think we're going to be more bearish this week again. Okay,
so you're down. What's your confidence level on that, Jane?
I'm pretty confident about it. I mean, we've been holding, downward trend overall, but I think it'll bounce. I think it'll bounce down here to 260. So if it hits that, I still think we're going to end up being lower. This is Monday, Tuesday, Wednesday, Thursday, Friday. So I think we're going to hold below 265 by the end of the week. 265
right.
Or 266. There we go. 266.50.
60% confidence, 70, 80?
I'd say 80%.
80%. That's pretty strong.
Yeah.
All right. Well, Anka, where are we going to go by the end of the week on the S&P? Up or down? What confidence level?
Okay, so first of all, I've been reading the research, and I think that for the very first time in a very, very long while, the confidence level for most of the readers went down. And I think I'm not the only one that observed this and noticed this, but it is for the first time when I saw that most of the readers of this report literally are seeing the things that may be pointing lower. So if you guys can see the charts, I'm not going to give any kind of details now, as we're going to discuss later, about the whys. But so far, I see that as long as we're holding the 20 EMA here, and so far we are trying and struggling. And let's not remember that today, there may be a lot of calibration happening. It is the last trading day of the month. And also we're going to be beginning a new month. The monthly charts don't look that promising either. So I have to agree with Jane that I think we may head into a retracement, but going into the end of the week is really going to be hard to place a percentage and that a confidence, because it's going to be on a day-to-day basis. And that's because we do have FOMC. We still have tons of earnings that are going to come out. And we saw that even if we had very strong earnings coming from last week, the market didn't really participate that much and didn't really worked its way higher. So I'm going to be 50% up and 50% down.
Wow. So, okay. So just 50-50 either way.
I'm going to be Switzerland right here.
Okay. Mm-hmm. Jim, where are we going?
Well, to me, it looks like it's going to be going down, but the confidence level, like Anka was saying, is not extremely high because I don't want to step in front of the PMI, the ISM, the Fed situation, and of course the unemployment report. That's a lot of juice to be stepping in front of. So obviously the confidence level would be more like the 40-50% area, because if these reports come in and they don't sell them, obviously it's all bets will be off on the bear side.
So let me see how this math works. If you're 40% confident it's going down, does that mean you're 60% confident it's going up?
Yeah, no, let's go to 50-50. Let's go to 50-50, which means basically, it could break either way. I guess that's what it means.
Okay. Okay.
So trade accordingly.
Right. Well, David's report, his algorithm that he's been running for a couple of years now, has a 60% confidence that it's going higher. Is that right, David? Just based on the surveys and your statistics?
Yeah. The sentiment from the actual survey was 58% from the 62 people who submitted responses, and then based on those conditions, which you can read about at the bottom of the page of the.
Your algorithm says basically that people are wrong, right? Most of the time.
It depends on it depends on the conditions. So I have all the different variables of how people respond, and then based on those, sometimes yes, sometimes like if they're extremely strongly bearish, it might be wrong most of the time. But as you can see with this week, the prediction based on past performance lines up pretty well with the actual sentiment from the from the respondents for this week.
All right, I think it's a pretty interesting study that you do there. So my prediction is down, and I agree that I think the confidence level on that's pretty low. I'll go 60% down. And I'll give my reasons for it when we go into the next round and show charts. Yeah, I love having a chart in front of me if we're going to talk about the market or a stock or something. But yeah, I feel totally naked without a chart to point at, talk about why. But yeah, I believe, and I think Jim's comments were good. There's an awful lot of new information entering the market, and to try and be out in front and guess what the results of some of that information are going to be, and then B, how people will respond to it. That's a tricky proposition. So not a bad time to kind of wait and see if a bigger trend emerges either direction. But I just technical analysis at the moment, I see a bearish trend and about a 60% confidence that would continue through the week. So now is when we get to go deeper with charts. I know Jane and Anka, you guys showed some charts, but if you want to go a little deeper and into your explanation, maybe some technical analysis you're doing, or whatever approach you use, let's do that. So Jane, lead us off again.
Yeah, for sure. Okay, so here we are back to that daily chart. And like Anka was saying, if you guys can see it, can you see it?
No, I don't see your chart.
Oh, there we go. Okay, so this, I pulled it back out to the monthly chart. So it does look like we are holding, this is the 29 EMA on the monthly chart, which we are holding above. So it, for the moment, in my opinion, and we back it on the weekly, it keeps testing this trend line here, and I feel like it's honestly going to fail down further. But just overall, everyone was saying, oh, well, the earnings are going to perform and they're going to pull us out of this downward trend. But in fact, really, Alcoa, I don't remember what day it was, but it was, recently, and we haven't had much of an upward turn since earnings started. It's still in that downward movement. And so that's why, yes, we do have big meetings that are coming out. And of course, the market's going to react how the market's going to react. So, I'm not putting all my eggs in one basket, saying this is definitely dropping this week for sure. It's definitely trade the market as it happens and protect yourself, because we do have, we had up days, down days, up days, down days, and it's definitely react accordingly and being present in the price action. But overall, I would say it is a downward trend to come.
Okay, downtrend, got it. Anka, any further analysis you want to offer?
Well, I have to agree with Jane. The daily charts and even the hourly charts, if we go a little closer in, they do not look very promising, but they're still fighting with a lot of support levels. So I'm going to start by, kind of like taking a closer look on the monthly chart. And if you take a look on the monthly chart, and I've been on this show since the beginning of the year, and actually when we rotated here to the downside when that volatility stepped in on February 2nd. And I kept on saying that this is just a pullback, and it's just a normal pullback. We're still holding, and the price is still trading above the 10 EMA right here. And the fact that we have been literally levitating above this 10 exponential moving average for about 22, and I started counting the candles right before I came on the mic, and I was just counting the candle, and it needed to pull back into some sort of zone. And if you recall trading within this area right here, we were running off projections, and everybody was running off projections. Everybody was complaining. Everybody was saying, yeah, we need to pull back in order to, have a more sustainable support level from which we can actively have a really nice bounce. Well, we have the support level right here, but it's really hard to get in balance after such a strong dynamic move to the upside. So the weekly chart is showing me that we do have relative strength. We're not even close to tapping onto the 20 SMA. We're holding here the 10 EMA. And the price is literally, we're going to be closing the month today. And so far, we have an indecision bar. So things are going to be a little bit wild going into FOMC and going into Friday's numbers. And in reality is that we're fighting the 2680. Today, again, we tapped onto the 2680 again. We didn't break it. We just hovered into that area for quite some time. And we really need to work this area up from 80 to 2700. And if we break above this area, then yes, we can resume the uptrend and actually look for a potential move higher. However, I'm going to be I'm going to start to be bearish only under the 2600. So we still are about 60 points above that zone, 60 to 65 points above that zone. I'm not going to be overly bearish just as of now. And that is because of the monthly chart. And when I trade, I specifically look at larger time frames to see how they impact the move. So I can correlate my swings. And moving to the weekly chart. So weekly chart right now, we're having an inside week. So this week just started. So the week is super young. It's just Monday and it's around lunchtime right now. But we're really working on taking this candlestick high. So the prior daily high, I'm sorry, from the weekly chart. I'm sorry, from the weekly chart. Yes. So last week we left with a big bottoming tail right here, meaning that the price got this lift up and it's really trying to hold this 10 EMA at the 60 between 60-70 zone. So far, it's getting a little bit of a negative price action, but I'm looking at the overall time frames. They're still struggling with tons of support level and tons of price action that happened throughout last week, because let's face it, we're in a very, very choppy market environment due to this first volatility flush that we had to the 200 SMA. One thing that I can notice here is that I can't speak about a downtrend because we still haven't broken these support levels here at the 2560. These are very important, significant levels that we have to watch on all of these time frames. So I do agree, we do have descending tops right here, and this descending top right here is not very encouraging because it is literally the 1, 2, 3. It's the fourth lower high right here, but at the same time we're holding support, so I can't speak about literally a downtrending move just as of yet for my charts. I'm really looking for a rotation higher. If this should happen, if the price should catch a bit above this 87 and 90 zone, that'll be more encouraging for a continuation higher. And like I said, I'm really looking for more information, and I'm overly cautious. I do not have any swing trades on right now. So that, to be very clear, I don't have any swing trades right on. And I think that I'm saving all my bullets to when the market is clear, when the market has clean setups. And to me, that's very important. So right now, I am just looking for the FOMC and looking for a reaction post FOMC to see how the numbers are. And Friday's numbers are going to be extremely important for the overall structure of the market and, of course, overall structure of the SPX. But right now, like I said, I'm relatively neutral. And as long as the price is going to hang out into these moving averages, you're definitely going to see a reaction on the 20. You're definitely going to see a reaction on the 50, and it needs to clear up the space. Unless it clears this area, I'm just going to stay put, look for some unique trades, look for some day trades. But even when you look on the 1 hour chart into the SPX, and I'm going to bring here for more clarity the S&P futures, because it's easier to assess on how it looks. Take a look at what's happening right here. So 2 weeks ago, we had this whole choppiness right here. So it's really hard for the price to actually reverse. So it's creating the pendulum effect, back and forth, back and forth, back and forth. And all it's doing, it's chewing up all that resistance to the left-hand side and it's trying to HODL, okay, and try to spike higher. So for me, break over this whole congestion into the 80s, 83 zone will bring more buyers to the table. And I think that we will have more clarity if the price is going to break over 2,700 for the upside. And as long as it's here in between this area, all the way into the 2,600, I'm still not going to be bearish for the long time frame. So I'm not speaking day trades. I'm just talking about the long-term trend.
All right. Well, you did have some more detail, Anka. Jim, you want to go a little deeper on your
Yeah, I like to use broad strokes and then small strokes when I look at anything. So the broad strokes are: we blew off to about 2,900 on the S&P in January, and then we collapsed down to about 2,500 in February. So when you have that kind of volatility up and down, the most likely outcome is you're going to go into a trading range, which is what we're in. Now, the high on the trading range was up at 2,800. Then the low was around 2,560. Then we came back up, and the high's been 2,730 ballpark, and the low's been around 2,580. And now you've got the 200-day average at around 2611, and you got the 50-day average at 2688. So the window is getting tighter and tighter, because after you throw a ball off the Empire State Building, it's going to bounce a little bit, obviously, higher because it came down from such a high level. So that's the broad strokes right now, as far as we're in a trading range after a parabolic move up and a parabolic move down. So basically, the thing that I would focus on or suggest people focus on is when it gets up near the resistance zones, consider doing things that would have to do with it going back down. And when it gets down to the support zones, you would obviously do things that would be for a rally. The VIX has been another decent indicator when it gets down to the 14, 15 area. in a situation where it would bounce back up maybe towards 20, which it did, I guess, last week. And so, right now, we're smack in the middle, right? 2660. It's not at the top, it's not at the support down low, and the VIX is fairly low. So, two-sided strategies would be something to look at. And then if you get up near the resistance or support, you want to take a position. If you could look at the price of limited risk options as a hedge, meaning if you're going to be doing some selling strategy, it would be a long call above to hedge, or if you're going to do a buying strategy, it would be a long put underneath. If the price of the insurance is not prohibitive, that would be a way for you to sleep at night with with some kind of a hedge on. But also, like in Home Depot's case, it goes down to the 200-day average at 170 area. And, if you thought that was a support because it's hitting the 200-day, you take a bite of it there, but you put a little hedge on underneath. And we just got about a 10% jump in Home Depot. So that would be an example of buying against support. So, basically, a lot of news coming out this week. But what has it been? It's been sell the fact, right? In other words, these banks killed it, right? Where are they? They're lower. So we may have discounted an awful lot in that January blow-off, and that's why people are a little confused that good news is actually no news to this market because we already discounted quite a bit of it.
Okay. I'm still absorbing all that. So I'm showing the S&P cash daily chart, and it's really interesting to me that the charts that Jane and Anka showed, I'm using a completely different analysis technique. You can see I've got Ichimoku cloud and a momentum indicator. I use a very simple version of Elliott wave for my core analysis. I use Ichimoku cloud to confirm trends and support levels and resistance levels and trend changes. And I call it East meets West. It's a pretty cool deal. But here on the S&P, I've defined, I agree, we're in this range. And if we just look, I also use a little Dow theory in the mix, right? And Dow theory, says, hey, the definition of an uptrend is higher highs, higher lows, higher highs, higher lows, all the way up to here. And, a trend change is when you get a low and a lower high and a new low, which we did have. And that's indicating a pretty high probability of a trend change. And you can see now currently we've got another lower high, right? Low, lower high, low, lower high. And it hit right at the Ichimoku cloud, which is projecting resistance. And now we're stuck with price right between the cloud, and I also use the 200 moving average. I think just about everybody's talked about that one. So we're stuck between support and resistance. And what's going to happen next? Well, if we come down from here and break the 200, I think we've started a larger correction. That'll be pretty clear evidence, and I'll go up to the weekly chart and start looking at the correction zones if that happens. Conversely, if it's a little high, higher low, new high, if we break up above the cloud, and that's a pretty similar level to the other folks we're talking about 2,700, just above it, we're probably going on to new highs. So if we break the 200, we're probably going down, and if we break, that's at about 2,600, 2,612. And if we break through the cloud up here, we're probably going higher. So we're at this indeterminate stage. It's a tough place to trade. I know a couple folks said they were not swing trading at this time, and I would say I caveat that I'm not swing trading anything that is correlated to the indexes, but there are plenty of other instruments that are dancing to their own drumbeat and are not correlated, and I'm still finding some decent trades there. I wanted to show I like looking on shorter time frames at the futures contract as well. I think Anka did that. So I've got the S&P 500, the E-mini here on a 60-minute time frame. And I mentioned that I use Elliott wave. There's a really clear impulsive move down that was really through most of March. There was a correction to it, and it corrected into this Fibonacci retracement zone. So that's a pretty clear wave 4. And now we've got a wave 5 continuation starting down to 2572, and the range on that would go down to, I'm just using the Fibonacci extension levels to project where that would go to, 2572, 2482. And you can see it was going pretty good, then there's a little hiccup, it got above the cloud. So I would not try to trade the index short until we broke down through that support level. And clearly, if we take out this previous low, then the probability of going into this target zone gets very, very high. But it's tough. It's a little bit volatile right now, not as clear as I would like. So again, I'm avoiding for the most part stocks that are correlated to the indexes till it gets clear. And I think Anka used that word too, not till it's clear. But there are other sectors and individual stocks again that have great setups and are not correlated, not moving with the individual indexes. So that's where I'm at. And that's it leads us into the bonus question here that is always fun to cover. And that's, we talked about the S&P 500 and, I think all of us agreed there's a lack of clarity there. Is there a trade right now that you do like that you would want to share with the audience? Something you're watching either for a setup or there's a good entry on now. Is there anything, Jane, that you like right now or that you're watching close?
You know what? Really, I'm looking for, I trade more of the gapping movement in the morning. And I find at this point of day, a lot of it just falls apart. There's no clear trend. The volume drops off. So maybe end of the day, but really I'm looking more at the gappers at the beginning of the day for the action, the earnings. And something else I wanted to say too about the SPY or S&P 500 is we have had some of the big FANG stocks report earnings and we have not seen, like Amazon, best quarter ever, and it's down 2 days in a row. So to me, that's also leading sentiment that people are selling off. But at the present time, there's nothing that I'm looking at until tomorrow pre-market.
Okay, and you're day trading primarily, you said, right?
Correct, yeah.
All right, Anka, any trades you like that you would share with anybody, with the audience?
Well, not specifically. I don't have anything on my radar except for some. I do have one chart, and this is oil. And this is the light sweet crude oil futures. It's the only chart that I'm looking at. I was observing it this morning at 67, reacted off the minor support level, and I do have the chart up here. It is setting up for a breakout level, but for me right now, the fact that it has tested and retested, I need a pullback and I need to get a better assessment. Obviously, this is a larger breakout and I'm looking for targets all the way into the 73. And this is pretty much what I'm looking at right now because oil has been a little bit, as I was analyzing the market through this weekend, actually on Saturday, and I was looking at them, and we cannot ignore the fact that oil is so bullish on the monthly chart. The price is trading, was trading above this, and this is the whole entire month right here. We're wrapping the month right now, so we're ending the month on relative strength. Trading above the 200 SMA, trading above this resistance here at 67.08, and right now popping a little higher. So any pullback back into the 67.20 may probably be a leg in opportunity for oil for a higher target. And like I said, I'm looking for $73 to $75, and this is a longer term trade when it comes to oil. And I think it's just getting ready to pop a little higher into May and June.
All right. So bullish on oil. I'm bullish on oil too.
Mm-hmm.
And I'm looking for a little deeper correction, just like you, a little weakness, and then I think there'll be a buying opportunity.
Yes, and energy stocks were incredible. So VLO, this is a trade that I've done. It exceeded every target. And even if you look on the daily chart, it continues to make new highs. So very, very strong. It's running off extensions right now. So it's just a gift that keeps on giving with some of these energy stocks. Very, very nice price action.
Yeah, very good. And I see the CL, the crude futures, on a 60-minute chart, it's got a target up. It could get up as high as 80.
Absolutely. Absolutely. So it's just what it did this morning. It just digested this whole move after this fake out that happened into the overnight trading session. The New York trading session just picked it up and just ran with it, ran into this resistance right here, not quite clearing the 69.55 level here, but very close to it. So any kind of popping, even if it pops above, which I would really like, and then a pullback, this is very, very solid for a continuation higher. I really like the way oil is setting up. And actually, interestingly enough, because we are speaking of, about sharing ideas, I just want to, just give my thoughts on, because I did receive a lot of questions before the show. I just want to give my thoughts on gold. Gold is in a sideways range as well. So 1310, I did mention it quite a few times. We hosted an open house last week for futures trading. And we did talk extensively about this level, about the 1310 level. I was not interested in this level at all. So I'm not interested in trading it within a chop. I'm interested in more clean looks. So as it pulls back to this level into the 1309, actually, I was looking for more of a pullback into the 1307, to be very honest, but it had a very strong reaction off the 1310. So far now is into resistance from these prior two lows right here, but it may reverse and may continue back up into this high again. So once again, very important area very important zone here where it reacted into the 1310, and so is silver. Silver seems to me like a buy zone right here. So let's not ignore the fact that silver has been very sideways for a very long time and has been, completely like literally not doing anything. 1612 right here got a reaction today at the 1624 level, right? 1621 level rather than 24. So it just trying to pop a little higher. If it comes in a little more, to me, it would be like a really small risk for, just to pick it up for higher. And I think that this would be 1, 2, 3, 4. It would be a quadruple bottom right here. So we'll pull back into this quadruple bottom. Maybe this time is going to be the charm, and maybe this time is going to try to go higher. So I'm pretty bullish right now on silver as long as it remains within these parameters, or even if it pulls back a little steeper right here. But these are some unique plays that I'm looking at.
Okay, and being bullish on oil, if we get oil up to $80 a barrel, that's going to hurt. That's going to hurt the gas pump. But if you get that trade right, you can go buy a Tesla. So, so Jim, what do you like right now?
Well, basically on the S&P last week when I was on a broadcast, we were at 2685, and the VIX was around 14. And so I suggested people look into a strategy and see if they felt that the premiums were reasonable on a straddle and a strangle, where you do calls and puts at the same time. And then you're really just betting on volatility to spike up. That wasn't a terrible idea because we went from 2685 down to 2610, and the puts obviously exploded in price. So when the VIX is down where it is, and it hit 15 area today, and when the market's kind of in a range and there's a ton of news ahead, investigating a strangle or a straddle to see if the prices are not prohibitive is not a terrible idea to look into, I don't think. As far as some of the other markets, I just wanted to briefly go over a couple things. Something I mentioned last week, the dollar was breaking out last week and it has continued to move up. That might be a very good reason why the gold can't get out of its own way right now. And as far as gold and silver is concerned, it seems to me like until the gold can break 1375, the look for any really big substantial breakout is not going to be there. And when it does, and if it does go to the upside, silver at an 81-to-1 gold to silver ratio might be a pretty good bargain. So when and if they can break out above those resistance zones, I'd become much more interested than I am at these levels, although there could be some support down here. And then on oil, we're in the 60-70 range, and I've been very friendly to oil because these oil stocks have been nothing but friends to me. They pay high dividends. They go up in price. So you're getting a yield and you're getting appreciation. That's a double whammy. And that double whammy doesn't seem like it's going to go away because gasoline prices in my neighborhood are up 25-30% in the last year. And with Aramco coming out next year to sell their company, Saudi Arabia probably would rather see the prices higher than lower. So we could even see more appreciation in gasoline prices this summer as the driving season starts hitting as well. So oil, like I say, maybe a stalling out here, maybe a pullback like Anka was saying. But, the turn in the oil prices seem to have occurred.
Yeah. So I think we're all kind of so far, three of us bullish on oil for sure. And my trade that I would share is funny that a couple people mentioned, I think Anka and Jim mentioned silver. So I'm bullish on silver. I think it's got more potential right now than gold. And I think you mentioned that ratio, Jim. And I got an individual stock on silver here. It's Tahoe Resources. And you can see it had first, it got crushed and then channeled for a long time, nearly a year. And then we got clear evidence of it breaking this channel, breaking the top end of that channel. It broke above the 200. We got positive momentum. And I got a price target on this up at $8. Got in at 534. And I think there's still room to get into this. And I think this looks pretty good high probability trade. So we're long on Tahoe, which is a silver company. And so that's an idea. And they do have a viable option market. So we're trading that, just buying some deep in the money, high delta, far out in time calls, and give it time, let it run, and rake it in, hopefully. That's my trade idea. All right. So back to the report and the questions. The special question, every week David throws in a special question. And the question this week is, what advice would you give, or what resources would you recommend to someone who is new in trading? And I know we all have, probably strong opinions about this, and we want to, make sure all of us get a chance to express our opinions. Every time we do this, everybody else goes first, and you steal all my good advice. It's really disappointing. Maybe I should go first. But so let's keep it concise, maybe 200 words or less. Give a couple thoughts on what you would, what advice you give or resources you'd recommend. And Jane.
Definitely for somebody that is new to trading is do the research and start studying the market. And for terminology, go to wikipedia.com, because that's a great resource for terminology that you might hear in YouTube videos or in reading books that you don't understand, and definitely a great free resource, as well as paper trade. So those are my 2 points that I would definitely recommend right off the bat. Don't jump right in. It's like somebody could buy you a car and they could hand you the keys, but if you don't know the rules of the road and you don't know how to drive, you're going to get into an accident. Same sort of thing with trading. You have the ability to open up a trading account, but if you don't understand what you're doing, more than likely you're going to blow it up.
Good advice. Good advice. And I like the paper trading, the sim trading, and I know a lot of people wrinkle their nose at sim trading. Man, it's not real, and it doesn't, all that. Here's my maxim that I come up with over the years, and it's if just because you're profitable in sim trading doesn't guarantee that you will be profitable with live money. That's a true statement. But another true statement is, if you cannot be profitable in sim, there ain't no way you're going to be profitable with real money. So, at least test it out first. I think that's great advice. Anka, what advice would you give in 200 words or less?
Okay, I was just trying to get the mic working. Okay, so I totally agree with what Jane said and what you said. And it is very important to start first, but I think it's most important to start, your education process first and then fund the account. So don't do it the other way around, because you may be tempted to try to take a first trade, try to get lucky. And that's the worst thing in trading that you can do. Get in the market without any proper trading education, take a trade or two or three, and then have the trades work for you, and then have that confidence in you. And then you're going to see everything reverse with speed light and going against you. So first, get your trading education. Like Jane said, you find a lot of free information on the internet, and there are a lot of webinars where you can find loads of information. But once you have, pretty much an educator, let's say, once you have an educator that sinks in with your personality, with what you're reading about, with your methodology that you think that works for the market. And once you gain confidence, let's say, in that educator, go with only one educator. Don't try to go to 10 different kinds of educators. Don't be like a chat room hopper. Don't be like an educational hopper, because that's not going to work for you. You need to find someone that you resonate with and stick with that person and learn that method, because this is what works. And in reality, there's only one technical analysis. Everybody out there needs to see the same thing. It's not that I see one thing or another trader sees a different thing. No, technical analysis, it's like math, and 1 + 1 = 2. It can't be 4 or 6 or 7. So it is not. It doesn't have to oscillate. The one thing that is oscillating is your time frame, or whether you're a day trader or a swing trader. And depending upon the time that you can dedicate to the market, you have to decide what kind of trader you are going to be. So don't start swing trading it, or if the day trade is working against you, you don't want to put a hard stop in, or you lower your stop, or whatever your trading strategy may be at the time. And then all of a sudden you're a swing trader because you're carrying that position overnight. So be very careful in the market. Become educated first. Open a paper trading account, and then again, don't get very comfortable in that paper trading account, because you don't have any emotions that are built in. And once you fund the account, you're going to see that your emotion level is going to increase. The emotions can help you. And trust me when I tell you this, you're not going to be able to remove all the emotions from the trading process, because it is normal to have emotions. And when you're dealing with the most precious commodity on the planet, which is money, you're going to be emotionally involved, and you're going to be watching your P&L. Now, when you're trading, my advice to traders is get in small. Don't go by, the regular risk size that you need to go by, let's say 1% or 2%. Because I have a lot of traders and beginner traders that have huge accounts, and they're starting to trade with, with 2% risk per trade. And I'm like, no, wait. There's such a difference between beginner's phase and more advanced phase. And there's a time when you can go with your 2%. Even in these markets, in choppy market environments, I reduce my risk size to half or under half. So I'm not risking my full size in positions that I don't see clear follow through. We're in a choppy market environment, and I'm saving my bullets to when we are in clear market direction. So keep in mind, one thing that I want you guys to take from this, infobesity is also a huge danger for traders. I often, I have wrote a lot of articles on this. You can find them on my LinkedIn page. It is linkedin.com/trade-out-loud. It's actually an article that I think I published back in 2013 or 2014 about infobesity. So be very careful on that. Information overload is really, really dangerous. The second of all, paper trading account, but as soon as you are ready and have that strategy pinned out, move to a real account and use half the size, or even a quarter of the regular account size. And other than that, just stick with your trading plan. Have a trading plan, and believe it or not, it makes a world of a difference. Line up, the strategy that you're going to be using, the trailing strategy that you're going to be using, and plan out your trade from top to bottom. And that would be my advice.
Okay. Thank you, Anka. Jim, your sage advice for...
Yeah, my sage advice. I'll give you a handful of things that I would do if I was starting from scratch. First thing I would do is I would learn the chart formations, because you need to have an idea on the technical situation of the prices. And a lot of the things that I would focus on would have to do with price and time, because we all have lovely opinions, and there's other people beyond this meeting that have more opinions. But when you're dealing with price and time, that's not an opinion, it's a fact. So the chart formations, I would learn all the different chart formations if I could. Then I would look towards the moving averages. Again, they work with price and time, and you've got short-term, intermediate term, and long-term moving averages. They also can be helpful to determine overbought or oversold, meaning if you're way above the moving average, like Boeing was at 400, it has a chance of coming down because of the condition it's in. Netflix is just went about up when it's at 340. It was about 40% above its 200-day average. And you can see, despite a great company and earnings, it has backed off. So the moving averages would be number 2. Number 3 would be the VIX, the volatility index, especially if you're going to deal with options. If the VIX is at 50, the premiums are going to be very, very large. If the VIX is under 10 and 11, the premiums are going to be obviously very low. And if you sell them when they're very low and then the VIX jumps way up, that's how you get the vol exploding trades that they had a while back. The fourth thing is know when your significant reports are coming up. Not that you're going to trade off the report, but some people do. And sometimes there's a way of doing two-sided trades into a report if the volatility is enough that can be effective. So know your reports. And the last thing, of course, I think is to try to learn how to hedge so you can put some parameters around, or what Anka was saying is risk control. I think essentially she was talking a little bit about that because you have to protect your bankroll. You don't want any one trade to be so significantly negative that it's going to obviously hurt your business. So strategies in the options areas like married puts or married calls, which are limited risk strategies against a position, or collars where you do a covered call and then you take the premium and you buy a put. It can put parameters around a position. So like we were saying, getting upset or getting mentally wound up, a lot of that comes from the fact that there's not a parameter around your trade. So there's lots to learn, and there's a lot of different ways to go. But I think those 5 that I just mentioned would not be a bad starting point.
I think that's all great advice, everything we've heard so far. I'll just focus in. A few folks have touched on it, but I'll focus in on, the first thing I would say to a new trader is get really, really good and understand risk control. Before you go into any trade, know how much you're willing to lose. And because that's a mindset that most people don't approach the markets with at the beginning is, how much could I lose? They're thinking about how much can I make? And if you approach the markets in any given trade and go, how much am I willing to lose if this goes against me? Because, good professional traders have an edge in the market. They win more than they lose, but they lose. And you got to control that, and you have to you have to move beyond an intellectual level going, yeah, I know that trades can lose, to some deeper level where you intuitively believe and understand and accept that some trades are going to lose. And as long as the amount you lose on a given trade is an acceptable, pain-free level that you can deal with, if it's not, it's going to take you out, right? You're going to drain your account. You're going to be discouraged. You're going to be remorseful, and just go through all these emotional gyrations. And so just to approach trading with, how much could I lose? And is that an acceptable amount, right? Once you get your head around that and you have, the math down, there's several approaches to it. I use 2%, which means I'm not willing to lose more than 2% of my account on any given trade. That's not how big is the position. It's how much would I lose if it fails. I use 2%. And, given my trading statistics, that's fine. I'm very profitable with the trades that losing 2%. But there's a variety of approaches. You can find it. Jane mentioned Wikipedia. Also, there's Investopedia.com, which is a finance, trading, investing focused website. That is an awesome resource. So I would say, very first step, come to grips with risk management and a mindset that I can lose, right? Otherwise, if you come in going, wow, saw this website and the guy was standing in front of a Lamborghini, and and I think it was Anka said, worst thing that can happen to a brand new trader is to win a couple trades right out of the gate and think that it's easy and I got this, and it may turn out to be disappointing. All right. We got a couple minutes left. If there's just a really, really brief thing you guys want to share, and you guys talked about the Modern Trader Summit, if there's a link or some information you wanted to, each person, really briefly if you could, and then we'll go ahead and wrap it up. And just back, top of the order, Jane.
Yeah, no, definitely. I'm just getting it up here. 2 seconds. Okay, let me go ahead and get the screen sharing going. All right, can you guys see it?
Yes.
All right, perfect. So here we have the Modern Trader Summit. Basically, it's myself, we have Stephanie Kammerman. She's known as the Stock Whisperer. She is very big on trading dark pool prints and trading where the big money goes, using those for levels. We have Kunal Desai. He is a swing trader, a day trader, a cryptocurrency trader. He is a big motivational speaker. We have Anka, who's here with us today. We also have Latoya Smith-Dean, and she is a mom of 2 as well, and basically day trades with her kids by her side. We have Alice Mead, who's a retired software designer that has now become a day trader and is living in Paris off of her profits now. And we have Billy Ray Wilson, who is a retired nurse and came into the day trading world and is just rocking it. And Sean McLaughlin from Trade Ideas, who has really used Trade Ideas to hone in his skills and really trades the S&P as an options trader. So a lot of different, and we've got Anka that specializes in futures as well. So we have a lot of different strategies that people use. And that's one big thing too, I'd like to say to new traders is it's not just one strategy that's going to work for each person. You have to find your own fingerprint strategy as far as what you are comfortable with your time commitment, your risk management. Every person is different. And so all the technical analysis is the same, but how you react with the market is going to be different from the person next to you. So you have to find your own strategy that works for you.
Okay, good. And Anka, if you could very briefly, just any closing thoughts or something you'd like to share.
Thank you so much. And like Jane said, it's going to be a wonderful event on June 23rd. Don't forget, guys, book your tickets early because they're almost gone. And I heard Jane said that we're like really running low on tickets. And it's going to be a great event. You're going to have traders from any kind of spectrum, from futures. I'm going to be covering futures to stocks, to swing trading, to day trading, to cryptocurrency. So it's going to be a wealth of information. Trade Out Loud, however, has as well its own event. It is going to be a power income day trading futures class, and it's going to be live with live trading in Boca Raton, Florida. And the event is June 25th through the 27th. It's at the Hyatt. It's in beautiful downtown Boca Raton, and it is going to be a 3-day event, jam-packed from 9 o'clock to 5 p.m. Eastern, all 3 days. And I'm going to be teaching you how to trade. I'm going to be teaching you my proprietary strategies, what works for me in the market. And I think that our performance portfolio is a true testament of how the method works. I'm also going to be participating and this is July 22nd through the 24th in Chicago at the Futures Traders Expo. We're going to be doing live trading there. It's going to be a great show. It is specialized for futures traders. So if you guys are in the area, or if you want to, kind of like set some time aside for July to visit beautiful Chicago, make some time to come and visit me. We're going to have a booth there. So I'm going to be very excited. So that's pretty much for now.
Okay, thanks. And Jim, any closing thoughts or
yeah, just my opinion is that we are going through a churning type situation with the market. I think we're going up, then we're going down, and you don't want to go through a lot of money in a churning environment, and you want to really start thinking about what do you think the big picture is all about. And in my view, the big picture is still intact. Tax cuts are going to be permanent. The repat money hasn't really hit yet. We could have some fiscal stimulus. There's a realization maybe that the economy and the markets can withstand a 3% 10-year and not fold. Earnings growth is supposed to continue up. And so if you do believe that the bull continues to live, what you might want to start thinking with the VIX down where it is what long-term options, leaps look like now, because some of these options go out to 2019. I think some of them even go out to 2020. And after all of this back and forth is done, if we're still going to be in a primary bull, then the people that are positioned, for 6 months, a year, 2 years down the road and took advantage of the financials being way down, the emerging markets pulling back and all that kind of stuff. We saw the people that loaded up on oil when it was way down, they're getting paid very handsomely now. So you don't want to you want to see the forest for the trees. And if you're a believer that this is churning activity that will be resolved with new highs, then you'd want to take advantage of what's going on right now and maybe look towards a long-term limited risk situation to make sure you're around for the turn if it comes.
Okay, thanks, Jim. And again, I'm Dean Jenkins, followmetrades.com. Here's my website I'm showing. And again, stock advisory, live trading room, and training and mentoring. I post my results that I get in my trading, both in my own account and that I publish to my subscribers. And the details of every single trade that we take are available here on the website. Post facto, I believe in complete transparency. So I saw all, the good, bad, and the ugly, and every single trade, the parameters of what we took. And I also have my results audited by a third-party CPA firm. You can click here, and I turn my brokerage statements over to them every quarter, and they audit them. And I've been doing this for about a year now, and they publish a objective report about whether I'm doing what I say I'm doing, and I am. And if you want to find out more, just maybe get involved with me. I do have a free weekly newsletter. It's called Beyond the Noise, and you can just sign up and get my market analysis on a weekly basis and get started. So that is it. Thanks, panelists. It was good being here with you, and turn it back over to you, David.
All right. Thanks, everyone. Great show. Just want to remind everyone watching, be sure to hit the YouTube subscribe button if you haven't yet to get updates on future shows. Also, you can go to TimingResearch.com to get access to any of the past reports or archives of the past shows. The Analyze Your Trade show is off tomorrow, but both shows will be back next week. So the next episode of this show, Monday, 1 p.m. Eastern Time, and then the next episode of Analyze Your Trade will be next Tuesday at 4:30 p.m. Eastern Time. And just want to thank, again, my guest for this week, Jane. Sorry, how do you pronounce your last name, Jane?
Oh, Gallina.
Gallina, okay. Jane Gallina of cjanetrade.com. Great having you here for the first time. So
thank you, David. It was wonderful.
And Anka Metcalf of tradeoutloud.com, Jim Kenney of optionprofessor.com, Dean Jenkins of followmetrades.com. Thanks, everyone.
All right, thank you.
Thank you, David.
Thank you, Dean. Thank you, David.
Everyone.